In this Track and Trade introduction video, I want to take you through and I want to talk to you about what I believe to be the most powerful tool available to us today in futures trading. That being, of course, the seasonal nature of markets. Now we're looking here at a chart. This is cotton. And cotton, of course, you can see is moving along with what I see as the seasonal trend. Now this is a trend indicator that has been created from the historical data of the market. We've gone back on the blue section, this is 10 years, and back on the red section, this is 15 years. So this is telling us over the last 10 and 15 years, on average, what we can anticipate this market doing over any given period of time. Now we use this as a guide in helping us to know and understand where markets might go and where they might rally or fall during any given trend. Now this is done because in the commodities market, the markets have a tendency to do the same things over and over and over, year after year after year. And that's because in the futures market, we have a situation where, let's take cotton for example. We plant it at the same time every year. We harvest it at the same time every year. It's susceptible to damage at the same time every year. Drought and too much water and storage fees and production fees and transportation costs. And all of these things are very seasonal in nature, which causes the market to rally and fall basically the same times year after year after year. That's why I say it's the closest thing to a crystal ball that we possibly have. And that is just a quick introduction to the seasonal nature of markets and how we use them to identify trends in the upcoming market. Now here's a chart that I want to talk to you about where we've actually turned on the seasonals trend, which indicates that this market is going to rally from this time point here back in January all the way into expiration out here in May. So we look at the chart itself, and you can see that this chart is rallied up through that same time frame. But notice these two other lines that are on the screen. Right now we have turned on the historical averages, and notice that the red line is actually a 1-year historical average, while the green line is a 3-year historical average. Now, the 1-year and the 3-year historical averages are actually price averages that we can lay right over the top of the chart. Unlike the seasonal nature of the market, which is down here, which is a trend average, these are the actual price averages. 1-year price average, of course, would be last year's prices. So I like to look at it, and I like to be able to see what prices did during this time frame last year. And then the 3-year average tells us over the last 3 years what this market on average did in price. Now, of course, this is the high-grade copper contract, which is a very seasonal market starting in January and rallies generally over the last 10 to 15 years on average up into expiration at the end of May. The third indicator that I want to talk to you about is the market probability indicator. Now the market probability indicator is laid in here at the bottom of the screen, and you can see that it's based on a number of years, and this is looking back into the data cube that we create with the seasonals indicator, and we look at each day individually, and we come through and we tell you what is the likelihood that this market will close higher or close lower than the previous day's close. And so you can come through here and you can see that this day has a high probability based on the past 14 years that this market will close higher than the previous day. Or over here you can see that this one has a high probability that the market's going to close lower than on the previous day. So this is our high and low probability days that these markets are going to rally on those days. And so this is what the market probability is used for, and we like to use the market probabilities to help us set stop loss orders to help us reduce our risk and our reward ratios.
The content of this program does not constitute investment advice. This program is to help enlighten you to the opportunities for further education and training techniques by industry leaders. This should not be considered as a solicitation to buy, sell, or invest in securities, options, futures, or Forex. Remember, trading does involve the risk of loss. Past performance is not indicative of future results. Stocks, futures, options, and Forex trading is not suitable for every investor. Please consult a professional regarding your financial situation before placing a trade.